Hey, what's up, everybody? It is Tuesday, September 8th. Market down again today. Now, a week ago, I said there was going to be a further correction. You can go back and check out my video. And that was based on what I saw with these tax flows. Corporation income tax flows had fallen below, that is, daily corporation income tax flows had fallen below the level of last year. I use that as a barometer for sales and profits. You get more profits, you pay more taxes. Tax flows go down when profits start to come back down. So that was an indication that we were seeing some kind of a slowdown. Now, this could be temporary, but the market was clearly overbought by many different measures. I mean, some measures it wasn't overbought, like I've been talking about the AAII weekly survey, but that thing has been bearish for 28 weeks now, so it hasn't been that helpful. But put-call ratio has been ridiculously low. The 10-day, the 20-day average of the put-call ratio, I've been talking about that. But again, the flows were enormous, you know, all that money going into the economy, that's very supportive. But again, corporation income tax is down. It was a signal to me that things were slowing down and the market was vulnerable for a correction. So a week ago, I said that was going to happen, and it's happened. We got some new data out today. I'm not going to say what it is. If you want to find out, you got to go to my website, sign up for a 30-day free trial of MMT Trader. My subscribers get all this stuff daily, right off the daily treasury statement. Like, when you think about it, you know, there are all these other analysts out there on Wall Street. They're looking at data that tells us what happened 30 days ago or last quarter. I mean, that is basically useless. That kind of information is not forward-looking. It is not what drives the economy and the markets. It is what has happened. And, you know, extrapolating forward off of that, you're not going to go very far. It's basically a guessing game. So, yeah, that's what I said a week ago. Now, you got some reaction here in other markets. The oil sell-off, you know, I've been saying now for a long time, producers were short for like 18 weeks in a row. They stayed short. They've been cutting down their short position, but they've been diligently short for the last 18 weeks, and now we're starting to see a pullback. Now, this pullback in oil, you know, that's just speculators looking at the stock market and they're selling oil. I mean, there's this, you know, connection there. They're seeing the stock market, equity markets going down, they're selling oil. Maybe there's some margin call situations related to that. Actually, the oil data that we have seen over the last couple of weeks has been pretty bullish. So you're going to get a great buying opportunity somewhere in here. I just don't know where, but you're definitely, I mean, you know, the fact that producers have been net buyers, even though they're short, they've been net buyers. Swap dealers have been net buyers. Who's selling in here now? It's speculators who were heavily long. All right. So I saw that coming. The dollar is enjoying a nice little, you know, one of these flight to safety rallies. Look, I've spoken about this so many times. The dollar is in a long-term downtrend based on not necessarily, you know, negative fundamentals created by the U.S. economy. I mean, the fact that the U.S. runs trade deficits and has large budget deficits, those are negative fundamentals for the dollar. Now, it just doesn't crash. It doesn't go straight down. The dollar's still globally very much in demand. You know, I don't know what percentage, but a very high percentage of global commerce still utilizes the dollar as the, you know, the unit of account. So, I mean, you're going to have these rallies and they need to be sold. I mean, just like the rally that we had from 2018 to 2020, and, you know, we're largely well below the levels that we saw over that period. I mean, the dollar really stayed in kind of like the dollar index, if you want to use that as a proxy, stayed like 96 to 100, and then we had that pop up to 103, 102.99 when the COVID crash happened in March, but then, went straight down, all the way down to what? Recently 91.70, so we're back in the 93 handle. You got to sell these dollar rallies. Now again, they could persist for a period of time. These are just zombies. These are reflex, knee-jerk reactions by people who don't understand. Oh, let's buy the dollar. Let's buy the dollar. It's a safe haven. It's not. It's not. And tomorrow you're going to have, Thursday you got an ECB meeting. They might say something. They might even say we're going to have new, stimulus, which is not stimulus. That'll knock the euro down. But the euro will gradually trend higher over time. It has to. Unless the whole European Union falls apart, which they had plenty of opportunity to do that over the last 20 years basically, or even if you just want to go back to the Greek crisis in 2010, so over the last 10 years they had plenty of opportunity, plenty of elections, plenty of changes in government, and many really draconian conditions placed on countries like Greece and Spain and Italy. They still didn't break out. Nobody left. So if they haven't left by now, they're not going to leave. And the fact is that most Europeans, they like the euro. They want the euro. Nobody's demanding to go back to the drachma. As bad as things were, and actually Greece got better. So the euro's not going away. And when you have policy of, negative interest rates and asset purchases and austerity and running trade surpluses as your means of basically economic growth for the main engine country, Germany, then, that's I'm sorry, but that's bullish for the currency. Now, it doesn't mean it's going to shoot up to 145 overnight, but over time, unless these conditions are reversed, unless these policies are reversed, the euro's going to go up. What can I say? I'm taking a long-term perspective on this. It's going to be, this is not a position I need to get out of, anytime soon. I just keep adding and adding and adding. Gold had a pretty decent day. It was up when everything else was down. But again, 1 week ago, I said the correction is going to continue. New data has come out. If you want to get an update on that, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial for MMT Trader. I recorded a new podcast today, and that'll be posted up tomorrow. I'll let you know. Have a great evening. Bye-bye.